Current market forces continue to put high levels of stress on Florida's property insurers, particularly those that have not effectively managed the complexities of this challenging landscape. I'm John Weber for AM Best TV. Here to discuss a recent AM Best commentary on the subject is Director Michelle Baurkot and Senior Financial Analyst Chris Draghi. And Chris, despite the lack of hurricane activity last year in Florida, storms of recent years seem to be having something of a loss creep impact on Florida insurers. Why is that so dramatic?
In 2019, we did not see a dramatic improvement in results, despite there being no major hurricane activity as seen in 2017 and 2018. And that's kind of highlighting that there are other market dynamics at play that domestic writers are being faced by and being challenged by in their performance. One of those things is reinsurance pricing. Now, the reinsurance pricing has been affected by this loss creep in the way that, on a net basis, the writers in Florida, the insurers, aren't being affected as much as the reinsurers because they've already breached their net retention. So anything coming through in the way of loss creep or adverse loss reserve development is being ceded out to the private market or the Florida Hurricane Cat Fund. So that said, it is influencing in part the appetite that reinsurers have within the Florida market, not only due to the adverse development, but also with a reminder of the absolute exposure that's within the market.
Now, Michelle, carriers in Florida spend a significant amount of money on reinsurance. What does AM Best expect as far as rates and terms going forward?
We do expect additional hardening of reinsurance pricing. The reinsurers have really had softer pricing leading up to more recent years, but we have seen the increase. And because of that, we do think that some of that cost is going to have to get passed on to the primary carriers. But we did start to see this earlier in the last renewal season, and some carriers, primary carriers, did already face some increased costs, and several did start increasing their retention levels.
Are the carriers adequately prepared for these increases?
There is concern that some are not, and especially those with weakened balance sheet strength assessments. And here, again, because the pricing will either have to be passed along to the primary companies, to the policyholders, or the primary companies will actually have to keep more of that risk net to them. And should they do that, it could have an impact, a negative impact on their risk-adjusted capitalization. Or if they keep more of that net, then there could potentially be more volatility in their operating performance. Either one of those could put pressure on the ratings of the companies we follow.
Chris, what are some of the ways AM Best accounts for catastrophe risk in the rating process?
Well, as you're aware, we use four main building blocks to determine a rating throughout our methodology: balance sheet strength, operating performance, business profile, and enterprise risk management. Starting with balance sheet strength, with our risk-adjusted capitalization calculation, the Baurkot best capital adequacy ratio, we adjust the VARs based on severities of storms. So we adjust for the net PML of the storm, ranging from the 20-year to the 500-year return period. Although in balance sheet strength, we only consider up to the 250-year return period. Then, in addition to that, we stress that Baurkot to see how a company would fare after an event takes place. So essentially seeing what their balance sheet looks like after an event has occurred. Secondly, in operating performance, we will gauge the impact of a storm on performance itself. What are companies doing to estimate that impact? How is it going to affect their results? What are they doing to mitigate their overall net losses within operating performance, and how do they bake that into their projections? And we also consider the volatility that we'll see or what to expect within those results. In business profile, we'll take a look at the geographic diversification as well as the product diversification to see what kind of susceptibility a company may have to a catastrophe based on its risk that it's assuming and its exposure. And then finally, in ERM, we will kind of have a conversation with a company to see what their thoughts are on catastrophe risk. How are they mitigating those catastrophe risks? What mechanisms do they have in place that will help them weather the storm, if you will? And even then, we also ask them what stress events do they use when they look at their book? What do they see as realistic events that could impact them, and how are they going to approach that in the future?
Chris, are there any mechanisms in place that could benefit the Florida insurers?
There are some mechanisms in place. One that we feel is important to the Florida reinsurance structure is the Florida Hurricane Cat Fund. Now, we feel it's an important mechanism, however, it does only offer a finite amount of coverage. At their most recent report in 2020, they've estimated to have about $17 billion in coverage available to all the writers. What the writers get in coverage is based on or allocated on the total insurance value that they write. Each insurer has the option to participate at a 45, 75, or 90% election rate for that coverage. Now, what that essentially is saying is if they elect to have a higher participating percentage, they'll get more coverage. What we saw last year was that some insurers, in lieu of going to the private market, found the Florida Hurricane Cat Fund terms more favorable and elected for larger percentages, which what that does is it reallocates the amount of coverage being offered to all the insurers within that market. So if you have a larger player that elects to take more coverage, it will essentially, or has the potential, to reduce the coverage of some of the smaller players. And in that light, going into 2020, there is some room for some players to also continue to increase their election amounts, which may reallocate how much is available to the insurers themselves. Aside from that, there has been the AOB reform that went into place mid-2019, and while it's still premature to tell to really quantify what the effect has been, because we don't have yet the 2019 year-end amounts to research, we have heard from the market that it seems to have had a positive impact and that AOB claims have been declining since it went into effect. To that end, it did only address the specific issues regarding assignment of benefits, or AOB issues, not necessarily the non-AOB litigation claims that have been coming through, which there is some legislation being presented this session, and we'll see what pans out when they conclude in March.
Thanks, Chris. Michelle. You can find the commentary online at ambest.com. For AM Best TV, I'm John Weber.